What is going on, everybody? We have to talk about Snap. The headlines are screaming that Snap just crushed its third quarter earnings. The stock went absolutely wild, jumping about 23% in after hours trading. Why the huge pop? Simple. Snap reported better numbers than Wall Street expected, and they dropped a $400 million surprise deal with an AI company called Perplexity. But folks, you need to look closer. When you peel back the layers on this report, the underlying business is still facing some brutal reality checks that should make every investor nervous. Let's start with the good news, the stuff that sent the stock soaring. Snap reported total revenue of roughly $1.5 billion. That's up 10% compared to last year, and it beat the expectations set by analysts. User growth looks solid, at least on the surface. Daily active users, or DAUs, hit 477 million globally. That's an increase of 34 million new users, an 8% jump over last year. Monthly active users, or MAUs, are now up to 943 million, closing in on the massive 1 billion user milestone. And here's the kicker that really got the market excited. Snap's net loss narrowed. They reported a net loss of $104 million. Now, losing $104 million is never great, but it's a lot better than the net loss they reported a year ago. Also, their adjusted earnings came in at $182 million, which blew past expectations by a mile. The CEO of Snap is saying that their focus on performance and simplicity is helping advertisers get stronger results, and that they are building toward durable long-term growth. This all sounds like a massive turnaround, right? The stock had been down over 30% for the year before this news hit, so any good news felt like a lifesaver. But don't get played by the headlines. The real story here is whether this company can translate user growth into lasting, reliable profits. And that brings us to the massive AI partnership. Snap announced that the AI search engine company, Perplexity, is paying Snap $400 million over 1 year. This payment will be a mix of cash and company equity. This is a huge cash injection, and it's why the stock jumped so hard. It's an immediate revenue boost, and it shows the market that Snap can generate money from something other than just ads. What's the deal? Perplexity's powerful AI answer engine is going to be integrated right into Snapchat's chat feature starting in early 2026. This allows users to ask questions and get conversational answers pulled from verified sources without ever leaving the app. Snap says that this helps fulfill their goal of making AI personal, social, and fun. This $400 million deal is Snap's first big step in positioning itself as a platform where major AI companies can connect with its huge young audience. This is a massive win for Snap in the short term, putting cash and equity on the balance sheet with revenue contribution starting next year. But now, let's talk about the problems that this new AI money is covering up. The first major problem is location, location, location. Snap's growth story is totally broken in its most important market, North America. Advertising revenue here grew by a pathetic 1% over the last year. Compare that to Europe, which grew 12%, and the rest of world segment, which grew 13%. The high value, big spending advertisers, the ones Snap was originally built on, are fading fast. Snap's large client solution segment is shrinking, now accounting for just 43% of global revenue, down about 10 percentage points in 2 years. They are relying entirely on small and mid-sized businesses, which grew 25%, but those gains cannot make up for the big money walking away. The core economics of Snap's advertising business are shaking. Global impression volume, the sheer number of ads Snap showed, shot up 22%. That sounds good, right? More ads shown. But at the same time, the money Snap makes per thousand ad impressions, also known as eCPM, fell 13%. Think about what that means. Snap is showing far more ads just to make the same money, signaling that the actual value of their ad space is declining. They are stuffing more inventory in, but the advertisers are paying less for it. This is a classic sign of eroding ad value. Next, let's talk about the rising costs. This company is spending money like crazy, especially to keep up with the AI arms race. Adjusted operating expenses were up 8% to $654 million. Their adjusted cost of revenue was up 5% to $671 million. The biggest driver here? Infrastructure spending, which climbed 8%, mostly to pay for the massive computing power needed for machine learning and AI. It's now costing Snap about 85 cents per daily user just to run their massive infrastructure. Even after all the good headlines, the operational reality is that Snap still posted a net loss of $104 million. Profitability still a distant dream, relying more on financial adjustments than core business strength. And here is the biggest warning shot the company just fired. They expect their daily active user count to decline in the next quarter. DAUs are the bloodline of a social media company, and their own executives are warning they will lose users. Why? Because of global regulations and new age verification policies. Countries like Australia are pushing laws that penalize companies if they don't strictly prevent users under 16 from having accounts. Snap is also preparing for platform level age verification from companies like Apple and Google, which will help them remove users who are truly under 13. While this is necessary for compliance, it means a temporary drop in those crucial user numbers. Management also admitted that some of their big moves to make money, like expanding the paid Snapchat Plus subscription features and other monetization efforts, are actually expected to reduce user activity. They're essentially saying, we're willing to lose a little engagement if it means we can make more money from the users who stick around. So, how is Snap trying to distract investors from all these fundamental problems? The $500 million stock repurchase program. A buyback looks like confidence. It looks like management believes the stock is cheap. But remember, Snap is sitting on $3 billion in cash and marketable securities. Announcing a $500 million buyback is a quick way to appease shareholders and offset the dilution caused by paying employees with stock. It's a financial maneuver, not a fix for the slowing ad growth in North America or the declining ad value. It feels more like deflection than true momentum. Looking ahead to the next quarter, Snap is predicting revenue between $1.68 and $1.71 billion. Their adjusted earnings target is between $280 million and $310 million. These numbers slightly top Wall Street estimates, but again, they come with a massive warning label about dropping user counts and rising infrastructure costs. Snapchat is stuck between a rock and a hard place. They have nearly 1 billion monthly users, and they just scored a massive AI partnership, but they can't turn that scale into reliable profit. Their most valuable market is stalling, the value of their ads is falling, and new regulations are actively threatening their user numbers. The $400 million AI deal is a huge injection of cash, but the underlying business engine is sputtering. Snap is still trying to convince the market that their few AI lenses and new users in less profitable regions signal a turnaround, but the financial metrics suggest they are running on pure hype. This earnings report wasn't a sustainable victory, it was a stay of execution bought with AI money. That's the breakdown. If you found this insightful and you want the truth behind the headlines, please remember to hit that like button. Make sure you subscribe to the channel so you don't miss our next video and ring that bell for notifications. I will see you soon.